Good day, ladies and gentlemen, and again we are in London Mines and Money 2013, and we are now at the booth of Laramide Resources, and with me here is Marc Henderson from the company. Marc, thank you very much for taking the time this morning.
Thank you very much, Johan, for having me on the show.
Yes, let's talk about Laramide. You are in the uranium space. What is the company exactly doing? Where are you located? Where are you working?
We are indeed. We've been in the uranium space since about 2004. We were fortunate enough to get a very large, very attractive project in Queensland, Australia, called Westmoreland, which we've been working away at since 04-05. We obviously went through a tremendous boom in uranium in the 05-07 period. Our stock performed fantastically well at that point. I think at one point we were the leading stock on the Toronto Stock Exchange over a 5-year period. We, of course, then went through the GFC in Fukushima, so even though we have the same suite of assets, our stock prices suffered very disproportionately. We think we're very close to the bottoming in the uranium space, and we think this project now will finally get underway. A big problem we had was with the politics of Australia and their attitude towards uranium, both at the national level and at the state level.
Yeah.
The national level basically got rid of the so-called three mines policy in 07, and it's taken till about 2012 for the state government in Queensland to change. We've now got a right-wing government there, very supportive government with a very, very large majority, and they're very interested in seeing our project get off the ground. What we need to have that happen, of course, is the price environment to improve a little bit. We've got $35 spot price environment. Yeah. There's virtually nothing in the world now in terms of a new build that would work at that price. Yeah. But we start seeing prices in the $50 to $60 level term price.
For next year, maybe?
I tend to be a little more conservative than that. I mean, I do think we're going to see prices now improve because you've seen some supply-related announcements from the bigger players, including the Kazakhs, Cameco, and some of the other players. So I can see the price in the 40s quite easily in terms of a spot market, and I think 45 is going to feel like about 85, given where we've been in the last 3 or 4 years. I mean, the Fukushima incident, was a major factor, obviously, in our sector.
Yeah. And also, I think we need to move back over the 45-50 level, because $43 is the all-in cost in the world by now as an average. So, on one hand, companies start to lose money.
Well, I think the existing producers, the people that have legacy contracts, are probably doing okay. You've probably got some high-cost, long life production that is probably pretty challenged at this level, and certainly even if I was the Kazatomprom or one of those kind of entities, I'm sure they would much rather be making an extra $10 or $15 a pound on their production. They have very nice, high-quality reserves, but I mean, any mine is ripping through its reserves all the time at a fairly high level. I mean, the level of production in the world is probably 110, 120 million pounds. The balance of what we need has been obviously met by these above-ground supplies that are finite. And I think the industry all knows we need to see a better level at some point. It's just going to be what the catalyst is to make that happen.
Okay, so let's come to your project. You are in Australia and you are in the US. You have already a 43-101 on one of the properties?
On 2 or 3 of the properties. We really have the trophy asset is really Australia, Westmoreland. It's an ex-Rio Tinto property. It's plus 50 million pounds. It'll come into production as one of the 10 biggest uranium mines in the world when it comes into production. It's very low technical risk. It's an open pit, 2-to-1 strip ratio, very low acid consumption. It's remote, which will lead to some higher costs than you would otherwise have, but that's the nature of virtually every mine in Australia is a fly-in, fly-out type of situation. But it's a very attractive situation technically in terms of the ease of the operation and where it will sit on the cost curve. So, it's a very attractive situation.
Yeah. So you think you're going to go with this into production somehow?
Our plan is, we've been very quiet because we didn't know how long the Fukushima effect would really take to work its way through the marketplace. We're starting to see some signs that maybe we're going to come out of that now. It's almost 3 years, obviously, since the accident. The Japanese are talking about reactor restarts. They haven't done that yet, but I think when you see that happen, we will get much more aggressive about moving the project ahead because, as I said earlier, the political backdrop now will allow that. We've got about a $20 or $25 million commitment in front of us to get to permits, to get to detailed engineering, et cetera, on the project. And we want to know that when we start with that, we're going to finish with that. So we're really waiting for that signal, and then we're going to go hard. But I would think that probably by the second quarter of 2014, we're going to make that decision and move aggressively on the project.
Good. What is the finance situation in the company now, and how do you want to finance a program like this then?
We haven't done a lot of capital raising just because the conditions haven't been right, and the insiders own a fair bit of the company, so we eat our own cooking. Pardon me?
How much are the insiders?
Oh, we probably own between 10 and 15% of the company, so we're very sensitive to dilution and what have you. We probably have the lowest capital structure of any of the sort of development uranium stocks that are out there, just because we're been very capital sensitive. We will look, when the conditions improve, to doing a more significant fundraising, where our capital is probably a little bit less than $5 million working capital now, but that hasn't really bothered us because our expenses aren't much unless you're really moving the projects forward aggressively. I do think we'll probably, as we move towards seeing the production head towards feasibility and permitting and what have you, I think we're going to be looking to bring in a utility investors and possibly utility consortium as part of the financing package.
Yeah.
Certainly when we do the build, the whole thing will be underpinned by obviously major utility contracts, etc. That's your standard means of financing these projects.
Absolutely. So what is the game plan for 2014 then?
I would say we want to get very serious now about moving the project forward, engaging with the government on the permitting in Australia. I think they're very receptive to it. I think you'll see us do a much bigger program in 2014 than we've done the last couple of years. We've basically been just moving the environmental stuff forward so that we're ready to go, and that we aren't held up by the fact that we haven't done all the baseline work that would be required to support an environmental impact statement. So we're basically ready to go. It's really a matter of seeing the right market conditions, doing a little bit of a funding, and then hitting the go button on the project.
Okay, super. Then we wish you all the best for that. Hit the go button. It's always good. We need it. And Merry Christmas.
Yeah, thank you. Same to you, Han.
Thank you. Thank you very much. Ladies and gentlemen, that was Marc Henderson from Laramide Resources. You heard it there in Australia and in the US. And next year, hopefully, conditions improve and the uranium price is going a bit higher. And as he said it, they want to hit the go button then. So we hope too for them. Thanks and bye-bye from London.